Okay, good evening, everyone. Welcome to another Wednesday night with Sequoia Lending. You blink your eyes, it's already the end of 2024. Amazing. Still remember the beginning of the year. It was just like yesterday, and you blink your eyes, it's a whole year is gone. So, right here, I wish everybody a happy, very, very happy holiday. I'm not sure how many of you are still working next week. Personally, I will be traveling to California to meet up with my families, and once a year we want to get together. Um, so this year, I actually talked to our senior management earlier this week. There's a lot of things happening in the company. Some of them I already shared with you. For example, we will be transitioning our company from Sequoia Lending to Sequoia Enterprise Solution starting January 1st, 2025. As we speak, the marketing team is working very, very closely with the IT team to update our software, update our web page, update our marketing materials, so on and so forth. So again, that's going to open up a lot of doors for us. And 2025, one of the programs that we'll be focusing on is the wellness program because we believe that program is going to be a door opener for many of us. And we also look back what have we done in terms of the loan wise. We funded, okay, we funded close to $50 million of loans, $50 million. And guess what? Out of that $50 million, this month alone in December 2024, in December, we funded $15 million in this month. So definitely we are closing the year very, very strong, and we have a few more deals that we need to close by the end of the year. So hopefully by the when the year end we close to get to 20 million. So that is definitely a record breaking for us. So yes, we close a lot of deals, but we also have a lot of deals that we cannot close. So instead of just telling everybody the good side of the business, I want to share with everyone the bad side of the business also tonight. So in today, our presentation is going to be on why are we not getting the loan close? Okay, why are we not getting the loan close? So um, let me turn on this and make sure that okay, great. So now, obviously, our main bread and butter is still funding commercial loans. Regardless what other product and services that we have our platform, commercial lending is still our main business. So throughout the year, we receive hundreds of scenarios. Now, obviously, we know not every single scenario can get funded. Not every single one of those scenario are workable. But however, for the workable loans, I would say a very good portion of them end up not able to fund. So we looked at all the statistics, we looked at all the files, why we are not getting funded. A lot of agents are getting frustrated because the deal is not getting funded. You're working very hard to go out there to submit the loan, so on and so forth. So here I'm going to share with you the top 10 reasons that we see throughout our pipeline why our loans are not getting funded. So hopefully when you out there working with your clients, when you're out there generating loans, you can be aware of the the mistakes or the reasons why we cannot get the loan closed, and you can help out the clients. So without further ado, we are going to dive into the top 10 scenarios. Number one, okay, number one is definitely incomplete documents, incomplete package. So for every single loans, a lot of you ask me, "Hey, Alan, what kind of documentation do I need? What should I collect from you?" Now, different loan has different sets of documentations. And also, even with the even with the same loan, if we send it to different lenders will require different sets of documentations. So that is the nature of our business. So that is why we do not need you to become professional underwriter in commercial lending. All you have to do is just to bring in the client. After we evaluate that client, we will tell you exactly what is needed to get this loan complete. So for every loan that's submitted in, we will give you and your client a complete list of documentation, of docs that we need initially. Now, initial documentation is not all the documentations that is needed to the submitted to the lender. The initial documentation is just for us to start the to get the ball rolling. Throughout the underwriting, the lender is going to keep coming back to us after they review the documentation, and they will come back to us and asking for more and more and more docs. So that is why it's very important for us initially to collect as much documents as possible so that when we submit that package to the lender, we want to minimize the chances for the lenders to come back to us to asking for more docs. And that is why George and his team is here to get involved to let you know what do we need. So when we send out this loan documentations, this list right here, we expect either you or your clients submit those docs to us in a package. Now, the biggest reason for a lot of the loans not moving forward is because we do not have a complete package that we ask for. Normally, we're asking for financials, tax returns, bank statements, so on and so forth. So one of the biggest thing that we see is that when we ask for financials, we are not getting what we ask for. We ask for tax return. They will send us 1099. They will send us W-2. That is not what we need. When we ask for a tax return specifically, that is what we need. So don't send us anything else. And also, please, unless we ask otherwise, please send us the complete package. I see somebody would just send us, when we ask for tax return, they would just send us the first page. It's not going to work. We ask for bank statements. Many times they would just send us the first page or even a screenshot. That is not what we're looking for. So when you send docs, and that is how you got paid, ladies and gentlemen, that is how we can collectively to close this deal much faster. So when you see we ask for a list of docs, please make sure when your clients send it to you or send it to us, learn how to read those docs. Always put yourself in the position of the lender, assuming that you are the guy, you are that lender, you have that $10 million in your bank, that you are the one that writing that check. When you look at the document that they sent you, how would you feel? Do you feel that this client is serious for you to write that $100,000, $200,000 check to that client? If the document that they sent you is not complete, most likely you're not going to fund that client. The same thing with our lender. If the thing is not complete, we are not going to be able to get it even moving to the next steps. So it's very essential for us to, it's important for us to review what we have. Now, obviously, we don't expect everybody to review the document. That's what we do. But if you're really serious about this business, learn how to read through it. And if you look at the bank statement, you know there are total 10 pages. You see one of 10, one of 10, 2 or 10, 3 or 10. You know that, right? But if they only send you 3 pages, automatically you know we need to ask for the other pages. So help us out. Go back to your client saying that, hey, this package is not complete, right? So the first thing that we see incomplete is the financials, tax returns, the bank statements. Now, also we want to see credit histories, credit reports. A lot of people think that, hey, they were saying that, hey, my credit it's 600, 700, 800. Why am I not getting the loan? See, in commercial lending, we are not just looking at the credit score. And quite frankly, in some loans, they don't really put too much weight on the credit score. But what they do is that they put a lot of weight on the credit report. Credit score and credit report are two different things. Credit score, you got 3 scores, whatever that might be. But most importantly, the lender would like to look at what the credit report looks like. Have you ever filed any bankruptcy in the past? Do you have any judgment? Are there any mortgage late payments? So on and so forth. So those are what they are looking for. So again, when we now, first of all, we do not pull credit. We don't. The client should pull their own credit. That is called soft pull. When they pull their own credit, it's a soft pull, which means that it does not affect their credit score. So now, where do they find their own credit report? Many, many, many different places. One of the places that they can do is to go to your website, go to the product page, and on the third column, there's one service that we provide is called credit repair. Click on the credit repair, you will see a link to apply for credit report. Only costs $1 for the clients to get their credit report. So I strongly suggest you to, if the client does not have a credit report, use that link to get that credit report for us. Now, normally we do not ask for it because most of the time the lender is going to pull their credit. Now, in some cases, when we ask for it, there got to be a reason we ask for it. So please help your clients to collect that documentations. We also look at entity docs. We look at auto documentation. Entity doc is that, as you know, pretty much all of our loans are funded to an LLC, to an organization. We very, very seldomly to fund in personal name. Okay. We most of our loan, I would say 99% of the time we fund to an LLC. So we do need to look at the LLC's document. The LLC document including the EIN letter from the IRS, the article of incorporation or article of organizations. We need to see the operating agreement, the operating or bylaws. If they set up a C corporation, it's by law. If they set up an LLC, it's operating agreements. So all those documentations are must to have. Now, some clients saying that, oh, I just have an EIN number. I don't have an article of incorporation. Then they have to make one up for themselves. They have to get one. It's pretty easy. They can just go online, download a template, fill it out, so on and so forth. And in some cases, we can even help them out to generate some of these documentations. But most of the time, they already have it. So it's very important for us to see the entire picture of what this thing's all about. So this is the number one cost, because oftentimes when agents submit a scenario form for us and they keep waiting and waiting and waiting and saying, hey, Alan, how come there's no how come there's no response from you guys? From our perspective, from the back office, every time when we receive a scenario, within 24 to 48 hours, we will respond to that scenario. We including you as the agent and the client. And in some cases, we including one of our loan advisors on that scenario form, asking for documentations. Now, if you never hear anything back from us, please don't just pick up the phone and ask me, "Hey, Alan, what happened to my loan?" Honestly, I have no idea, because every single day we have so many files that come in that's impossible for me or any one of our advisors to answer your question if you just pick up the phone. If you do want to talk to us, please do us a favor. Let us know what is your client's name. What is the property address? Then we can go into our database and tell you very, very quickly. Or another ways to do is that to send an email to support at seclending.com, seqlending.com, and give and ask support. Vaughn is great. It's pretty good in answering all of our needs. Just ask them, hey, Vaughn, what happened to my loan? This is my client's name and this is the property address. And Vaughn should be able to let you know. If Vaughn cannot find out, they will let us know and we will respond to you. Okay. So that is the number one reason we cannot move forward or the loan is not workable. It's just because they never provide a complete documentations to us. The best way for you to find out is the list is checked up or not. From now on, okay, we already transitioned into a Dropbox. We no longer want you to just email documentations to us, because many times the clients send us an email us one. Let's say we ask for 10 docs. One day they send us one piece of documents. The next day they send us the second one. The third day they send us 4, 5, and 6. It's just going all over the place. So from now on, all documentations will be uploaded to our secure portal. So for every scenario, after we ask for a list of documentations, we always provide a link, an address for the clients to upload their documentations. And once they upload something to the portal, the system will create an account automatically for that particular file. So in that case, we will add you onto that link or onto that a folder that you can see what is inside of it. So if we ask for 10 things, if you only give us 9, we are not able to move forward. Okay? So that is the number one reason. Complete documentation is the most important thing. What comes in, what comes out. Nothing comes in, nothing comes out. So that's the number one reason. Number two reason is credit issue. Okay? Is credit issue. Now, a lot of clients would like to think that, hey, I have a very good credit score. But what is a very good credit score? What is a good credit score from our perspective is that anything above 700, it's a good credit score. Above 730, much better. Above 760, excellent. Above 780, phenomenal. You get everything that you want in the under the under the commercial lending products. Anything that below 700, okay, 680 and above, it's okay. We can still work with you. From 660 to 680, there's the bare minimum for a good for reasonable rate. Put it this way: for reasonable rate, below 660 depends. From 640 to 660, some lender can take 640, some lender can take 650. But however, there's a lot of lenders would not go below 660 for DSCR loans, for long-term loans, so on and so forth. So in order for you to get a good loan, a credit score above 660, it's a must. I see a lot of scenario comes in, put in a credit score as 610, 600. Can we still do it? Yes, absolutely, we can still do it. But however, the leverage will be much, much less. Will be much, much less. And the interest rate will be much more expensive. Okay. And anything that below 640, most likely you cannot get a DSCR loan. A DSCR loan is a long-term 30-year note. So anybody that below 640, now it becomes a bridge loan. A bridge loan normally is 12 months to 24 months. It's a short-term loan. It will get you some money, but you have to put down a lot of down payments. So what we have seen is that a lot of the clients saying, hell, I have good credit score. But once we check their credit, that is not the case. So once the credit score changed, the whole dynamic of the loan changes. Okay. Now, in some cases, their credit score is good. Somebody saying that my credit score is good. My credit score is 700. Why are you still not able to get me a loan? It's because from the credit report, remember, we don't just look at the credit report. We also look at what? We also look at the reports. What is inside of the report? Then we found out that they have late payment, they have judgments, they have other anomalies. So in that case, the lender need them to explain what happened. And if the answer is not satisfactory, then the lender will decline the loan. They don't want to take the risk. Now, also in some cases, somebody still have good credit, but they have not been using their credit card for they haven't been using their credit card. They have been using cash. So there's no credit. So even though the credit score is high, but they don't have something called a trade line. TRADE, trade line. What is trade line? Your credit report, your credit card is a trade line. Okay. Your mortgage is a trade line. Your car loan is a trade line. All those things are trade line, which means that you pay on a monthly basis. If they don't have enough trade line, even though the credit score is high, but it does not demonstrate to the lender that this person have enough credit to get the loan that they need. So again, that is not another issue that might cause the loans to go south. So make sure our client has a good credit score. So that's the second thing. Now, also with credit score, in some loans, for example, in business loans, SBA loans, they don't only look at your personal credit score. And as a matter of fact, your personal credit score might not be that important. For most of the lender, when you have a 650 personal credit score, they're okay. But also what they're looking for is something called E-Trend. That is an SBA, their own credit rating for business. So the E-Trend need to be at 180. Now, how do they calculate it? I don't know. Nobody knows. So they would just punch in the company's name, punch in the EIN number, somehow, somewhat, it just spit out a score for that E-Trend. So if the E-Trend score is not high enough, then they're going to reject it. So how do they get a higher E-Trend? Obviously, it's debt. If the company have a lot of credit card debt, has a lot of other loans that might draw down the E-Trend score, right? So credit is also another reasons many of the loans is not going to go through. Let's move on. The third one is high DSCR. High DSCR, which means that high leverage. Anybody understand what DSCR stands for, right? Debt service coverage ratio. In commercial lending, that is the first vocabulary that you need to learn, that you need to understand is DSCR. No matter you're doing a purchase, commercial loan, SBA loan, business loan, whatever that might be, everybody's talking about DSCR. So basically, DSCR tells the lender what is the cash flow of that property or of that business. What is the cash flow? Okay. So high DSCR basically means that the profit is not there. Okay, the high what kind of DSCR the lender is looking for? If you're talking about 1 to 4 unit investment property, they're looking for DSCR of 1. Now, what does it mean? DSCR, how do you calculate DSCR? You use the income from the property or from the business divided by the expense of the business or the property. So use the property as an example. The income is from what? From the rent. So let's say the rent is $2,000 a month. Now, what is the expense? The expense including property tax, insurance, and what? Mortgage, right? So now you know this 3. So now you use the income divided by all the expenses, and if you equal to 1, what does it mean? It means that the property is not making any money and it's not losing any money. Whatever comes in, it goes out. The lender is okay with that. As long as you have a 1 DSCR on a residential investment property, then you are okay. Now, when I say high DSCR, what does it mean? It means that, let's say, if you have, let's say if you have commercial property, okay? A commercial property, normally what they're looking for, it's 1.25 and above. Because commercial is a lot more risk than a residential, okay? So now if the DSCR, if the DSCR, it's too high. Well, I shouldn't say. I shouldn't say use high DSCR. I should actually reverse to say low DSCR. Okay, low DSCR means the number is low. So probably I should change that. So let's say the DSCR is 0.75%. What does it mean? When the DSCR is 0.75% means what? Means the income is less than the expense, which means that the property is losing money. So when the DSCR is not ideal, that tells the lender that this property or this project is not profitable, does not cash flowing. And now, in order for them to fund this property or fund this project, you have to put down more money into the project. Or in another word, they give you less dollar amount or less loan amount. Or in some cases, they don't even want to do it. Okay. So again, DSCR is very important. So that's why we calculate the DSCR. And a lot of time you heard of saying that the DSCR is not enough. The DSCR does not cover the property does not DSCR the debt. So basically means that the income does not support that loan amount. Okay. So that's another reason that we see why the loan is not going through. The next one is experience, history. So, time in business. Now, in commercial properties, if you're purchasing 1 to 4 unit investment property, it doesn't really matter how long you're in business because now you can use the property as the collateral to get the funding. So even though you are the first time investor to purchase your first investment property, no problem. We will still give you a loan. Now, however, if you're talking about construction, you're talking about fix and flips. That type of investment is a little bit more sophisticated. The lender would like to see what kind of experience that you have. And now take a step further. If we're talking about SBA loan, we are talking about business loans. That has nothing to do with commercial real estate. The lender now really want to see how long have you been in business. So give you an example. Today, one of the agent called me up saying that, hey, I got a client that need to purchase commercial trucks. The first questions that we need to ask is that how long have you been in the business? If you've only been in business for a few months, now what they want to see is that what have you done before this business? So quite frankly, a lot of the clients that used to work for someone else, for example, they have been driving truck for other companies and they know how the business work. And now instead of driving for someone else, now they open up their own company and they want to start their own business. That's fine. That's completely fine as long as you can show us 2 years of history or 2 years of experience in that industry. We are okay. We still can fund you, right? No. So how do you show experience? Tax return. From the tax return, we can pretty much figure out what you do. All right. So year in experience is very important. Now, also a lot of people asking for, hey, what about startup? In general, the reality is that if you are a startup business, it's very, very difficult to get funding. If anybody would provide funding to you, most likely they will only provide you something, very little, for you to get started off. Because the reason behind it is that you have not yet demonstrated to the lender that your business model can make money. Does it make sense? So unless you can show 2 years of tax return, anything within 2 years of history to the lender, they all consider it as a startup. It's not stable. So startup, it's very difficult to get funding. That is reality, unless you have collateral. Okay. Also, when I say time in business, it's track record, experience. And I mentioned that when you are in construction, especially in construction, if you've never done something like this before, no lender out there would dare to fund you. You have to find, if I'm talking about construction, you find a piece of land and you're saying that I'm going to build a house on it. Now you hire a contractor. That contractor or that builder has to be a co-signer of that particular project. So otherwise, no lender will give you any money for construction. So track record, experience, time in business are very, very important. And oftentimes I see loans that go south because they cannot demonstrate their experience. And sometimes a lot of clients saying that, well, I have the experience. They will write down all the experience. Now, the lender is not going to just take your word for it. For example, our fix and flip, we will ask you, or construction, we will ask you, what have you done in the last 36 months? Show me your track record. And they will write down the address and whatever that might be and show it to us. We don't just take your word for it. We will do the due diligence. So the lender is going to go into the public record to take out the property address and find out the history of that property address. And if your name did not show up, they cannot verify your experience. They're going to the uh, the request or shut down the loan. So when you out there talk to your client, learn how to ask them. No matter what they do, ask you, hey, I need 20,000, 30,000, 100,000, whatever that might be. Learn how to ask them, how long have you been in business? If they tell you more than 2 years, the chance for them to getting a loan is much, much easier than if they tell you that I only been in business for 2 months. Okay? So those are the fourth reasons. Let's move on. The fifth reasons, previous rejections. Now, a lot of times you will run into client that come to you saying that, hey, Alan, I need this loan right away. Somehow that lender cannot get it done for me. I need it to get it done ASAP. So when you hear something like this, be cautious. You need to find out why the other lender is not able to get it done for you. You want to find out the story. It's because if one lender rejected your loan, most likely other lender will reject it with the same reason. So that's what we've seen in the back in the back when somebody that comes in. If I mention it to everyone, the way that we work is that we package it and we send it to 2 or 3 different lenders to get a bid on that particular case. So in many scenario, we came back 3 or 4 different lenders came back with a similar reasons that they do not like this project or they do not like this scenario or whatever the reason might be. So you need to find out what the reason is, or we need to find out what the reason is. And especially when they got rejected from other lender, we want to find out which lender rejected you. Is that a traditional bank? If a traditional bank rejected you, we might have a chance because again, we know we work with a lot of clients that goes to go to a traditional bank to get a loan and the bank does not give them a loan, which is great. If the bank rejected them, we love those clients. It's just because we are totally two different fundings. We normally we have a saying that when the banks say no, we say yes because we know how bank work. We are alternative lending. The bank is what we call agency lending. Okay, agency lending normally they want to look for the best client. They make a lot of money. They have an A paper. That's what we call A paper clients. That's what the lender is looking for. We are not. We are alternative lenders. We want to look for the B paper client, C paper client, whatever that might be. Now, however, if they got rejected by other alternative lenders, which is in our same business as us, then we need to find out what's going on. Okay. So always ask your client when they are very in hurry to come to you saying, hey, Alan, I need to get this thing done. I need to get this thing done quickly. Always ask them why. Why are you come to me right now? What's the story behind it? Right. So that is another reason that I see um that the loan cannot get closed. Next one, it's financial obligations, meaning that they have too much debt. They have too much financial obligations. When you look at a loan, we run into situation where the client saying, "Hey, Alan, I got a piece of property. The value of the property it's $500,000, and I have a loan on it for $400,000. Can you give me more money?" The answer, 100% of the time, the answer is no. I don't care what property you're talking about. When you have a value of $500,000 and you have a loan of $400,000, that means that the loan to value LTV, it's 80%. It's 80%. Nobody's going to give you more money in the commercial world. No one is going to give you more money because the obligation is too much, is too high. We also have another situation where the client's saying that, hey, I have a loan for $500,000 and my loan is only 200,000. And now you see, wow, okay, 500,000, you only got 200,000. So that's only 40% LTV. Fantastic. I can do that loan all day long if that is true. If that is true, what do I mean by that? Doing the underwriting, then we found out that not only that they have the first loan, they also have something called a HELOC, or they also have something called a second lien. That it's another 200,000. They didn't tell us. And once we found out, you have the first loan is 200,000, the second loan is 200,000. Total is what? Total is $400,000. There's no way that I can give you another loan. So that loan is gone. That loan cannot get closed. So that is why upfront information is very, very, very important. We need to find out exactly what this client can have. Same thing apply to SBA loans or business loans. A lot of the clients that they run the business, they come to us saying, "Hey, Alan, I need $100,000, and I make $1 million a year." That's fine. Then, if you go into our scenario form, we always ask, "Do you have any other applications? Do you have any other liens on your business? Do you have any other loans on your business? Please provide me a debt schedule." That is the reason that we want to see a debt schedule. A debt schedule is that I want to see how much debt does this business have. Now, if a company that makes $1 million, it does not mean that they pocket $1 million. There's a lot of expenses with that particular business. So oftentimes you see somebody saying that I make $1 million, but their expenses is 900,000. So which means that every year their net profit is only 100,000. 100,000 you divide by 12, it's only what? It's less than $10,000 a month. And now they're going out there saying that, hey, I need to get a loan of 100,000, 200,000. You're not able to get a loan like that. And another thing is that a lot of the lender do not tell, a lot of the clients, they don't tell you how many loans that they have until we dig it out, until we plug their EIN number and also their company into our systems to find out, oh, wow, you have so many other you have SBA loans, you have cash advance loans, you have all these daily payback loans. So everything adds up. There's no more equity. There's no more liquidity for you to, for your business to get another loan. So high financial obligation is another big reasons why we cannot get this deal done. Next thing is collateral. Now, there's no such thing as free money in this world. Many times client will come to us saying, "Hey, Alan, I got this great idea. I need 100,000, I need 500,000. How can I get it?" I say, "I cannot. Well, I will not be able to get you money based on your idea. Idea is not a collateral. We are lenders. We are not investors. So please make sure that you understand. We all understand one thing, right? We are lenders. We are not investors. So when somebody come to you saying, "Hey, Alan, I have this idea. I can make this much in the future," keyword future, it's not going to work. I cannot do anything based on the future. The lender do not underwrite anything based on the future, even though in some cases it might, but that is something else. In general, they don't underwrite things based on future values. They always ask for collaterals. So that is why you oftentimes you hear me ask you when you come to me saying that, "Hey, this guy need 100,000, 200,000, but he has no experience, yada yada yada." Then I always the first question I ask is that do they have any collaterals that we can utilize to give them the funding? So what are collaterals? So real estate, investment property, it's collateral. In our line of business, if somebody come to me saying, "Hey, my primary residence worth about $5 million, and I only have $1 million loan on it. I got $4 million equity in my primary residence," I cannot use it because we are commercial funding, we are commercial lending, we are business loans. We cannot mix business loans with primary residence. So anytime when you hear somebody say that this is primary residence, we cannot touch. So learn how to ask. When they saying that they have real estate, the first thing you always ask is this your primary residence or is this your investment home? And if they're saying that this is an investment home, okay, great. I can do that all day long. I can use that as collateral. Now, in some cases, I might be able to use their equipment as collateral. Now, not all the equipment we can use. Okay. Normally we use equipment that has values to it. So for example, we about a year and a half ago, we did an equipment loan for for medical business that they have so many positioned medical device. It worth millions of dollars. Yes, then we can use that as collaterals to give them the funding. Some people saying that, hey, I have a truck, a commercial truck that is free and clear, worth about $200,000, $300,000. Okay, we can use that as collateral. Okay, so sometimes we can use equipment. We can also use business value as collateral. What is business value? I need to see your 2 years of tax return. I want to see what your business is worth for. How you can tell me all day long that your business worth about a million, 2 million, 5 million. It's all good. I believe you, but you got to show me the numbers. If the numbers make sense, yes, then I can give you the money for it. So collateral, a lot of the time when the loan fail, it's because again the collateral does not make sense. Now, oftentimes we have people that come to us, give us a oil field. Yeah, it's a collateral, but not many lender likes collaterals like this. Learn to think one thing, right? From the lender's perspective, they always think like this. If one day you're not going to pay me back my loan, what am I going to do with this piece of collateral? A lot of clients saying that, wow, my piece of land worth about $10 million. I'm just only asking for 1 million. If I don't pay you back, just take the whole land. But the lender doesn't think that way. The lender would think, what am I going to do with that piece of land? I don't want to sell. I don't want to build. I'm not a builder. So instead of me giving you that $1 million on an oil field, I might as well use that $1 million, invest that $1 million in a multifamily. Does it make sense? So again, it has a lot to do with the type of asset as well. We have a lot of people come to us saying that, oh, I have a gold mine, I have a diamond mine worth billions of dollars, and I just asking for $200,000. How can I know that you have diamond in that mine? How can you verify this? How can you appraise this? So again, things like this, it's very niche, I would say, and lender do not like niche products. Lender do not like niche properties. And also, you have properties in the middle of nowhere, in a rural area, and all of a sudden, in the middle of nowhere, you have a hotel. The lender is going to ask, "What am I going to do if you do not pay me back? What am I going to do with this hotel sitting in the middle of nowhere?" So again, it's depending on the type of asset, and many times the loan do not cannot go anywhere just because of the type of asset the lender do not like. And now in today's market, what type of asset the lender do not like? Office buildings. Nobody likes office buildings unless that building is very, very strong. It has a lot of values to it, and the LTV is very low. The clients is very strong financially. We might have a chance. Otherwise, nobody likes office. Okay, so the type of collateral. Next thing is, of course, bankruptcies. Anything that showed up on your credit report have a bankruptcy on it, most likely it's an automatic, declined. Especially within the last 9 years, you have a bankruptcy, it's not going to fly. Now, I mean, can we still do it? Yes, we still have lenders that do not really care about bankruptcy, that kind of stuff, but it's going to cost them so much more money. And most of the time when people have bankruptcies, they still ask for us a loan. They will not be able to afford the loan that we provided to them. So normally, because you have a bankruptcy, we can maximum fund you is 50%. 50%, and the interest rate, you're talking about at least 13, 14, 15%. And normally they only give you the loan for about 12 months to 24 months. So the question is that, yeah, if today I give you a loan for 12 months, what happened after 12 months? How can you get out? Right? How can you get out? So bankruptcy, it's definitely is not doable. Now, how do you go around it? You always look for a partner. No matter what you do, you're bankruptcy, that's fine. Look for a partner that has much better credit score. The two of you combine, form an LLC together. The other person owns 80% of the company. The bankruptcy guy only owns 20% of the company. Now we can still get the loan done. But you have to use someone else who has a good credit score. Industrial type. I mentioned oil, gas. This is high risk. Adult industry, cannabis, right? There's a lot of people come to me saying, "Hey, Alan, can you do cannabis?" Yeah, we can do cannabis, but again, the choice is only very, very limited. A lot of the lender out there don't even want to touch cannabis today. They don't even want to hear the term cannabis. So the type of industry that you are in that determine, um, you know, how difficult a loan is, or if it or is or even if the loan is durable or not. And last but not least is the down payment. That is very, very important. People got to realize that you need to have skin in the game. The more money you put into the project, the safer the investor or the lender will feel. The more likely they will give you the loan. Okay. And the less money that you put in, or even you don't want to put in any money, lender do not like this. And I give you a perfect example. We have a loan right here that the client purchased the property 3 years ago for, I believe, for $200,000. $200,000. The property is purchased using foreclosure. It was through foreclosure. The property at that time was about $500,000. He got it for 200,000. Is that a good deal? Absolutely is a good deal, right? But instead of him himself put in $200,000, he got a hot money lender to give him $200,000 to purchase that property. He got it, no problem. That hot money lender just look at the property. He doesn't care about what he does. And now, after a few years, now the hot money loan it's due. He needs to refinance it out. He needs to get out of that $200,000. But now the new lender look at it and saying that, hey, you didn't put down anything. Even though the value of the property increased, there's a lot of equity inside of the property. But the fact that you did not put in any equity into the property, I will only lend you based on how much you put in. So they only give him 70% of the $200,000. So he still have to put in 30%. So many lenders do not like the fact that you don't have any skin in the game. Construction, same thing. Construction. You look for a lender that funds you 60%, 70%. You need to put in 30%. But a lot of clients saying that, oh, wow, I got a lender that give me 30%. I will look for another lender that give me 30%. Oh, hold on. The first lender will say, no, 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 no. I don't like that. I don't like you to have two lenders because my 70% plus the second lien 30%, that is 100% loan. I don't like that. It got to be in the form of debt. Debt means investment. That means not a lien, not a loan. Means that, hey, you can go out there, you can work with investors, you can get 30% money from your investors and put into the project as debt, as equity, sorry, as equity. Then I'm okay. I don't care where your money come from, but it cannot be a loan that recorded on the deed. So again, down payment is always important. That is why we always ask our client how much you want to put down. Now, the reality is this, that if you are purchasing a single family homes, 1 to 4 unit investment properties. You need to put down minimum 20% to 25%, 20 to 25%. Okay. You're talking about commercial property, mixed use, apartments, retails, whatever that might be. You better minimum put down 30 to 35%. So that is pretty much the norm in today's market. Okay. So those are the reasons that we see why some of these loans are not going through. Um, Now we believe that every loan has a chance to get it closed, especially the first reason, the incomplete documentations, and it's just lack of following up. So on our end, we will try to follow up as much as we can, but again, we can with all the deals that's coming in, there's no way for us to follow up every single loan, and sometimes those clients just tried us out. They were just shopping around. So you as the agent, the minimum that you can do is to help us to follow up the documentations. The rest we cannot control, like their bad credit score, the properties in the rural area. There's nothing we can do about this, right? But at least the minimum we can get the documentation in as complete as possible for us to move to the next phase. So hopefully today you have some understanding about why loans cannot close, and if we can get through the obstacles and we work together, and I'm sure that in 2025 we can close a lot more deals. So that's all I have for tonight. Thank you so much, and I'm going to stop the recording and see if any other questions that